Hi everybody, thanks for tuning back into Crypto Mainly. My name's Lee. Well, Bitcoin misbehaving as we expected over the last couple of days. Thank you for your interest in my channel, guys. Please do like and subscribe. Just jump straight into the content. So we had a look at this trade. I did say that there was a trade position here. For those of you that were brave enough whilst all this chop was going on in the price action. But as you can see, the trade was a success. Congratulations to those that took that trade. Just what's going to happen, what we're looking at now. You can see we've got this broadening wedge. Now, broadening wedges are one of the most difficult patterns to trade, in my opinion. By the time you've actually realised it's a broadening wedge, it's usually too late, and you know you're sort of so far into the price action for the pattern to form that it's basically sort of useless identifying it by the time you get there. Having said that, if we look at the 4-hour time frame here. We can see, I'm just going to get rid of this trade now. Obviously that one was successful, so we'll pop that into the successful basket. If we can have a look down the bottom here, you'll notice that we've got a tweeze, what we call a tweezer bottom. And what we mean by that is the candle bodies close at almost exactly the same price. And also the wick bottoms there are almost exactly at the same price. So a nice clear tweezer bottom there, which would tend to suggest that we're going to get at least a short term, not necessarily reversal, but a decent sized bounce from that type of candle pattern there. So something to watch out for there, guys. This price action is likely, if we go back down on the smaller time frames, we'll probably see perhaps come back down and retest the lows. At which point, down at the lows here, I'll be watching to see if support holds. If it comes back down, it may not come all the way back down to support. In fact, what I'm going to do, if I just show you how I would look for entry on this one. If you go to an hourly time frame, drill into small ones, you can see that you've got like a topping candle here. So I'm quite happy to use that. I'm going to use a fib level from the lows there up to the high. Okay, and I'm going to just swap that round on there so that the fib is the right way up. Okay, so I'll be looking for an entry at around about between the 78.6 and the 88.6. Those two levels, I'll look for the price to come back down. As you can see there, I've marked that dotted green line. That's actually a key monthly level. Wouldn't be surprised to see it just tip below there slightly. But I'd be happy to actually take an entry on that level, basically. So I'd be actually looking to take an entry on that position, and then be looking for a 2-to-1 risk reward ratio. So stop loss below the support there, and then a 2-to-1 risk reward would take us up to there. So it gives us a projected target of 39,250 as being the target there, and the stop loss at 38,000. All based upon that 4-hour tweezer bottom. That'll be the next trade to watch out for, guys. So let's have a look. This is the daily that we've been watching on this chart over the last little while, and we were obviously looking for price to break down from this channel and have some kind of wick coming down to this lower dotted line here. So if we just zoom into that, let's have a closer look. Okay, so we have got the breakdown from from support here. There's another chart which I'll come to in a second, which I've been talking to you about in the last 1 or 2 days. But this is one that goes back for a while now, when we were looking at these various triangles and things, and when we first identified that rising channel. But just showing you this chart really, because we were looking at this up to a few days ago, and just show you how it looks. It is breaking down. The projected target for this, as you'll remember, we were talking at maybe 36,900, somewhere around that red dotted line. The longer the time goes on, obviously, because of the support line creeping up, then of course the target for this wick down will gradually creep up as well. There's nothing to say that that we won't break through this support if we get a sudden capitulation. If the market participants start to panic. So if we get down below, below this support level, and we see the market participants start to panic, then we could get this capitulation, which we're talking about, which I'll show you on the next chart, but where we get, you know, a wick down, a sudden wick down and up again, you know, something like that. But you know, we'll be watching out for that. We're a long way off from that yet, but you know, it's something that is a possibility. So, you know, if you do see the prices break down from here, you know, it's not necessarily time to panic immediately. You know, if you've waited this long, then you know, I will wait to see what happens, because I think that there's going to be some kind of capitulation event in this area here, followed by price taking off. So this is something which is the more recent chart that we've been looking at. So every now and again, guys, I'll start from a fresh, clean chart, and I'll start from the higher time frames and work backwards from the higher time frames to the smaller ones on a fresh, clean chart. And this is obviously what I found. There's a guy in our trading group called Sean, Sean the Whale, we call him affectionately. And thanks for this, Sean. He pointed this out to me, that you've got like an Wyckoff accumulation pattern happening. And sure enough, you have. You've got, obviously, you know, you've got the PS point here, then you've got the move down to the SC level here, AR up to the top. The ST, I mean, I think actually it's only a shallow ST on here. I think it's actually this point here, and then you've got the continuation from that, and then this point here I think is this wick high, and obviously then we've got this. You know, it does on the Wyckoff there. You'll notice actually that this high here is actually lower than this one, and on this one it's actually higher. But you know, it doesn't have to be exacting, but you can see the similarities of this Wyckoff, and the point of Wyckoff, just so those of you that don't know, is to shake the market participants out of the market, so it frustrates people. It breaks below support and then breaks back up again. It breaks above resistance and then it fails, and gives you all sorts of chopping action. And that's the whole point of the Wyckoff accumulation, is it shakes out market participants. It takes out the long positions and the short positions to gain liquidity. And of course, just bear in mind that, you know, while these guys are trying to accumulate, they have to convince the market by you know, formulating sort of strategies where the price is looking like it's going to dump down and you know, be horrendous and everything, because, you know, for the big whales and exchanges and things to be able to buy the coins to have themselves, they have to convince the market participants to sell. So for every buyer there's a seller, and for every seller there, you know, needs to be a buyer. And that's what Wyckoff is all about. It's an accumulation region where, you know, the big players, if you like, are convincing the market, you know, shaking out the market and trying to get the market participants to sell their coins. And then obviously once everybody's all you know, had enough, you get this big capitulation, big sort of spring event here, where it takes out the last of the bulls, the people that are just hanging on in there thinking, no, everything's going to be okay, it's going to turn around any minute. You'll see this big capitulation event happen, which is called the spring here. And then some sideways action at the bottom there, and then obviously, you know, and then follow on from there higher. The two areas of mark there, if I just highlight that, so you've got the two areas of mark there. The upper dotted line here are the wick lows from our July 2021 lows, okay, which is 29,500, and this is the absolute low, if you like, which is the wick low there in the middle. Which is 28,750. If we start to see candle closes below those areas, guys, then, you know, then unfortunately that's going to take a long time for the market to recover, and we'll likely see prices down maybe as low as 22 to 24,000 if we start to close below these levels here. But we're a long way away from that yet. I'm expecting to see you know, some kind of capitulation event, which is a big candle followed by some consolidation at the bottom there, and then the recovery. And the recovery is likely not to happen. You know, I mean, it suggests here that it's a huge sudden spike. But from the last Wyckoff that we had, what we found in actual fact was the price. You know, it was consolidating for a long time, and then, you know, it kind of gradually, sort of slowly crept up, and then before we knew it, we were like, you know, a massive, huge sort of all-time highs again. From memory, I forget exactly where it was actually at this precise moment in time. I'll look that up actually, because it'll be interesting to see. I'm pretty sure it was down here. Looking at the price action here, and if you look at this, if you look at you know, this price action here, yeah, I'm pretty sure that this was the last Wyckoff that we were talking about, where you got the center point, and then you got the spring there. you know, which would make sense actually. And as you can see, once once it had broken out of the downtrend, it didn't actually, it didn't just suddenly take off and just leave everything standing behind. It actually took quite some time, although it was, it was nice growth. You saw the rollover, and then it was sideways for a long time, gradually going up, and then rolled over and gave back sort of 50% of its gains, and eventually ended up at the top there. So in terms of sort of time frame for that, let's just have a quick look, just to give you an idea. So once this is over, from sort of bottom to top, if you like, it was 113 days, which is, it's getting on for 4 months from the bottom to the top. So don't expect to suddenly, be waking up and think, oh, everything's going to have taken off and left you behind. This move from the bottom here, from 29,000 up to the 69,000 here, it took almost 4 months to do that. And which would make sense actually. If some of you have watched some of my other videos, you'll know that I'm expecting towards the end of the year, sort of September, October, November time, for the new low to be formed after the summer alt season. And that would make sense if we look at sort of 4 months from now. That would take us up to the end of August, and that lines us up nicely actually with the the beginning stages of September, which when September comes around, traditionally that's quite a bad time for cryptocurrency. If you look back and do some back testing, you'll see that September's a bad time. So it would make sense that we have this spring, then we have maybe some sideways consolidation through some of the months in May, and then obviously taken off up to into the summer, have a nice summer alt season, and then rolling over to sort of towards the end of the year, September, October, November time. Followed by, so that would create the new lows, and then followed by the the run up to the next halving, which is May 2024. So let's have a quick look at the dominance. No clues here, unfortunately. This is the dominance. I've been watching this chart for a long time now. In fact, back to May 2021. So this chart goes back for a long time for me. But you can see how accurate TA is, and just how it's followed. Even to the point of the actual, you can see just faintly there, you can see in the background, I've drawn these sort of M patterns, and you can see, just how accurately it's been following it. So I do expect, this dominance to break down, which would make sense with the summer. I think possibly, if Bitcoin does get a quick wick down, capitulation, we'll see a spike in dominance. That would make sense. We see something come up, maybe even as high as the resistance, and then rolling over to the downside. And I think it will break this support level here. Once we get down here again, I think we'll break down. Once we get below 39% on the dominance, then there's going to that alt season is going to be fantastic. And that's what I think we're going to see in the summer. I still think that's going to happen. The charts are still telling me that. If you look at this as a descending triangle. Look at this as a descending triangle here, and the measured move from the open end of the triangle down to the bottom there. You can see that we're talking about sort of 27%. I mean, if we do get a breakdown from dominance from 39 down to 27%, then that alt season is going to be explosive and will be thoroughly enjoyable for all of us, as long as we're on the right side of it, of course. Yeah, I mean, this is what I'm expecting at the moment. I mean, you could say, just about looking at this, the blue dot lines, you can see it's still following my pattern, which is basically, I said it was going to consolidate between this high and this low, which it is still doing here. Okay, so yeah, I mean, I wouldn't be surprised to see the Bitcoin price come down, dominance go up, then roll over, and then we'll have this alt season from the breakdown from this level all the way down, break through 39%, and then continue on down to the downside. So let's just have a look at Ethereum. Ethereum, it's actually came down a little bit lower than I thought, actually testing the lower support line here, which is a little bit concerning. But as you can see, it is trying to break back up above this lower support and back inside this pattern. So I do still think at the moment that we're going to see something like this. If we do get a sudden capitulation in Bitcoin, then it will be reflected on this chart. But if it is, it will be a quick wick down, and then obviously the recovery very quickly as well, as per sort of this chart here. you can see actually, if we look at the difference between this one, this chart here, this support line is actually lined up with these lows here, with this wick low here. So you can see it's cut these off a little bit, and you can see that actually I've drawn this one slightly differently, but I've also tried to include the first trend line, if you like. So this trend line, this support line here, is the one that we've drawn on this chart. But I've also just taken into consideration, the wicks and things here, so you can see, the base of the wicks there, the cluster of the base of the wicks there, which form that support line, which goes all the way up there. And also you've got the other one, which is the wick lows. So you've got wick low there and a wick low there, and you've got this one here, which actually price hasn't come down to yet. If we just have a little bit of a closer look at that, this is where we're kind of looking at for this type of area here. Where I said about this dotted line, this dotted line here at 36,900. Let's just have a look, see what we're looking at there. So yeah, where the support line is gradually creeping up, you can see actually, even if it went straight down from where it is now, you're still looking at about 37,000. So yeah, 36,900, 37,000, somewhere like that. If we come down and bounce there, that would be great. That would be, just a retest of these lows here. If that doesn't happen and we break down below here and we start seeing candle body closes below the sort of, the 36,900, you start seeing candle bodies closing down here, then unfortunately we are going to see, I don't think there's going to be any bear trap scenario down here. If it's going to happen, it's going to happen in here. If it gets down this low, it'll be too much for the market to recover. There'll be too many panic sellers and things, and you'll get this big, huge capitulation candle come down. But of course, we're looking at these measured moves here are back down to 30,000. There's going to be a huge amount of buying interest if Bitcoin gets back down to 30,000 again. So the spring, if you like, the bounce from this 30,000 level may take us back up above support things, and us carry on up, into the sort of the low to mid 50s, if that happens. But we're so far away from that at the moment, guys. I don't want to be telling you that that's definitely what's going to happen. We're so far away from that now. We've just got to take one day at a time and see what happens here. This is a critical area now that we're in now. The higher term time frames are pointing towards the fact that we're going to get further downside. So we just need to watch what happens over in this area over the next coming sort of days and weeks, and then obviously we'll sort of watch that carefully, and I'll try and update you accordingly as we go. Okay, so we already looked at Ethereum, and I've given you my thoughts on that. So yeah, I think we'll leave it there today, guys. Thanks ever so much for all your interest. Just while we're on the subject of being interested, I am on Twitter. You can follow me at Crypto Mainly on Twitter. So at Crypto Mainly. You've also I've got my NFTs for sale on Opensea and on Rarible. At the moment, they're 0.1 Ethereum, which is about $285 today. I've got about, I think there's about 7 or 8 left for sale at that price, and then the prices will be going up. So thanks for your interest in those, guys, and I look forward to seeing you tomorrow. Take care now. Always remember, take profits and buy something real.